Mr. Vimal Kejriwal, the MD and CEO at KEC International, join us on the show now. Hi, Mr. Kejriwal. Good afternoon. Thank you so much for making time. First up, your performance this quarter was not that great, and this is something that you had indicated when you had scaled down the FY22 guidance itself. What about FY23 going forward? You had earlier indicated a guidance of 15% growth. Are you sticking with that?
Good afternoon, and thanks for having me. I think we are clearly sticking to our FY23 guidance of 15%. Maybe it may be even better than that because the order intake during the year has been very good. Although the revenue and margins got impacted, especially because of the high commodity prices. But we got an order intake of 17,200 crores, which is 45% higher than last year. So I think we have a comfortable order book, which is why I think we are quite comfortable on our revenue guidance for next year.
But are these orders coming at a decent margin? Because on account of the entire commodity pressure that we have seen, your performance also got impacted this quarter. Going forward, how do you see the margin performance of the company?
So what happens is that the orders are always taken at a decent margin. Even the ones where we are now losing some money were also at a decent margin. But then the commodities played spoil sport. Now what has happened is that our view, and I think the most of the market view, is that the commodities have reached a peak and the prices should not go up. So now we do expect that we will be able to deliver the margins at which these orders are quoted. I think that's my answer.
So this is not a pass-through. That is what you're telling us. The margins do get impacted as the price moves.
So we have a mix of contracts, both fixed price and variable pricing. So most of our contracts in our civil and railways business are pass-through, where the margins or where the cost increase gets passed through. In transmission, especially some of our international projects, the prices are at fixed price. Some of the Indian projects are also fixed price. So I'll say there are few projects which are fixed price, which have impacted the margins for the year. But majority of the projects are passed through now.
Right. So I just wanted to understand, it's not that, majority of the projects are passed through or not. I mean, it's extremely uncertain to, predict any type of commodity prices, what's happening. Sometimes availability may be an issue irrespective of the price. So how are you looking into this phase, where it's getting very difficult to, bid for new projects, taking any assumptions on commodity prices? How are you trying to manage that?
So Pankaj, what we have done is, one is our focus has been more on the variable price contracts. How do you manage that one? Second is, when we are bidding for fixed price contracts, we have been taking, with the help of our supply chain team, taking a proper call on saying, where do we expect the prices to be? And then accordingly start trying to factor them into our tender. And third is also the execution is getting, let's say, modulated, or the way the commodity prices are moving. One of the reasons why our turnover is lower than what we were expecting to deliver is because some of the items where we felt that the prices are now coming down or will come down, and that has now been proven, especially with aluminium coming down from 3,500 to 2,900. I think so. You use various factors to try to de-risk yourself.
Fair enough, Mr. Kejriwal. Can you also talk to us about how your working capital cycle has moved in the quarter gone by, as well as the debt trajectory that we should expect going forward?
So the banking debt is slightly lower than the quarter 3 and all that, whereas we have got bank acceptance. So overall, the interest-bearing debts have moved up and resulting into a little bit higher interest cost instead of 2%, 2.1, 2.2 or so. So we are generally okay with that. Q1, we expect it to start moderating. So we should have a better Q1 in terms of our debt numbers.
All right, sir. Thank you so much, sir, for taking out time for us and telling us about your numbers.